Welcome to Trade the Trend, a weekly video about where the stock market is heading. This video is going to focus on the SP 500. I'm going to have a look at the ASX 200, copper, gold, and uranium in a separate video. I'll leave a link for that in the description section below. I've also got a graph for you of a market which I think we need to keep a really close eye on, so make sure you stick around for that. As always, this is general commentary. It doesn't take your personal situation into account. With all of that said, let's get into our first chart. So we're going to start with the SP 500. And what we've seen over the last week is we've seen more consolidation. And this is a consolidation we've been speaking about over the last couple of weeks. And we spoke about that the price was getting quite stretched above these moving averages. So I'm looking at the 50 and the 100-day moving averages. And we can also put some Fibonacci retracements on. So let's use this low here from late May. This has been the start of the most recent impulse rally in the S&P 500. And when we put that on, you can see the Fibonacci region is still sitting beneath the current price action. It's back towards where the moving averages currently are. So I think there's still scope for this market to do some consolidation before potentially pushing on to new highs. And so look, I think there is that room for consolidation to continue. Another interesting thing to look at is to put an RSI on this. So let me just duck to another chart. So this is the S&P 500 again, and beneath I've got a 14-day RSI. So an RSI is a relative strength index, and it's interesting. When you look at this, where the market got to in the last couple of weeks. It's quite an elevated level. You can see it's into this white zone. Spends most of its time in the blue zone, but occasionally it will dip to the white zone on either side. And when we just compress this, go back a little bit further, you see each time the market gets up into this white zone, it does tend to coincide with some sort of period of consolidation. So you can just pause the video and go through them on your own. It doesn't necessarily mean the market's going to go and take a big dive by any stretch, but it often, when the market does get into the white zone, it peaks and it turns down. We often see it revisit this mid-range of the RSI, and that would entail further consolidation. So this is just one to watch for now. And it's interesting. A viewer left a comment. I think it was last week. He said, "Look, if you think the market's going to be consolidating is peaking for the time being, why would we not sell and buy back later on?" And it sounds like a good idea, but it's actually a very hard thing to do in practice, to pick the highs and pick the lows. And you almost always, well, quite often at least, getting out too early or missing the right time to get back in, and you see the market runs and you're not there, and it's a really difficult thing to do. So rather than trying to be too clever and getting in and out, my preference is to try and stay with the broad sweeping momentum. And that's what I've been doing in the S&P 500 since really back here in October. I haven't tried to play all these ups and downs along the way. If you pinpoint it, you do a whole lot better, but almost nobody pinpoints it. So I'd prefer to play the momentum. And reminds me of a great quote from the famous Jesse Livermore. He said that it was always, what did he say? He said it wasn't my thinking that made the big money for me. It was always my sitting. So rather than try to time everything, just sit with the trend. Let the trend do what it does, and that's where you make the money. So if this market wants to chop and consolidate and then potentially go higher, that's what I'm trying to do. That's what I'm trying to help you do as well. So I think the play here is to remain long. I don't want to add to my positions up here. I don't think this is an asymmetric entry point at the moment, but I'm maintaining my core holding. Trend remains in place until the price action tells us otherwise. At the moment, it's telling us consolidation. But look, having said that, I'm also going to continue looking for opportunities as they present in individual stocks. So you might remember a few weeks ago, we were speaking about this stock, Globally Online, it's ticker code GLBE. I spoke about it as it had broken out of this congestion band. It was above the moving averages. It just pulled back. Looked at the volume program. volume profile, and the volume profile was we're seeing strong volume come through on the break upwards, and then as the market was consolidating, volume was backing off. And now, just again in the last few days, we've seen another surge in activity and again on higher volume, despite the market pulling back. So this is why I say be open to individual ideas and assess price action on its merits on whichever stocks you're looking at. But I'm just making sure I'm looking for stocks where the price is above the moving averages are rising, and I like stocks coming out of tight compression bands on good volume. So they're the ones I think to keep an eye out for. Now, let's jump over. Quick look at the Nasdaq. It's really a steeper version of the SP 500. Possibly the market could try to dip high or dip higher here and just get above this previous high point. But really, I think the consolidation is the play that we're looking at here. It does seem stretched, even though we've had a couple of weeks of consolidation. It's still stretched above the moving averages. We can put some Fibonacci's on. Just let's use the late April low that looked like that looked like the start of this impulse wave, and you can see there's lots of scope for the market to pull back and do some consolidation. So again, I don't think it's an asymmetric sort of entry point. Like one scenario which I've considered would be like, if the market did try and make one more run at a high, you'd get a situation where, when going back to that RSI, look, let's just quickly put an RSI on this one as well. If the market were to tip up to a new high, it's unlikely the RSI would match it. So then you get divergence in the RSI, and then that potentially opens the window for some sort of a correction back towards the moving averages, back towards the Fibonacci's. So this is all complete speculation, of course. I'm just looking at possible pathways that the market might take, and why, even if we do get an extra run here, I don't want to be adding to positions. I want to be holding, as I was talking about earlier, but I don't want to be adding, because I do think the prospect of consolidation is very real over the near term, over the next few weeks, maybe over the next couple of months. Got to wait and see. And I'm going to have a look at the Russell in a moment, and also a key market we've got to keep a close eye on. But first of all, if you're getting some value, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. Just tells YouTube that you're watching, you're engaging. Then YouTube will go and show other people, and that helps me a lot. So please do that, and hit the subscribe button if you haven't already done so. All right, now let's jump over to the Russell 2000. So the small caps. It's look, interesting setup in the Russell. Encouraging price action, I think, over the last few weeks, in that the price is holding above the 50 and the 100-day moving averages. The moving averages are now saying across to the upside. We are in a range, and they do ebb and flow quite a bit with when you're in ranges, these moving averages. But nonetheless, it's while the price is to the top side of the moving averages, we always want to give upside the benefit of the doubt. I think that we can also draw in a support. Let's just draw in a support to keep an eye on. Just comes in here, just a short-term support around 1,820 thereabouts. Just picks up some highs from early in the year and the most recent low point. So if when I compress this chart and look at it, it's like I still think this could very well be a basing formation in the Russell, and if it is, it also then flows on to being positive for the overall stock market, I think. But it's a range. We never know which way a range is going to break until it breaks. I don't want to get ahead of myself and preempt it. I do favour that it does go to the upside. But we don't know. We've just got to wait and see. Let's wait and watch the price action and act accordingly. Now, let's go over to this other market. Now, I showed you this a couple of weeks ago. It's the US 10-year bond yield. Really interesting. The yield has really been compressing over the last probably about the last 4 weeks. We're just beneath the resistance from this. It's a bit of a downward sloping pennant or wedging type formation. had the big run up in yields, and we've had this over the last 8 months. We've had this narrowing consolidation. Now the yield is narrowing even further. It's doing so above the rising moving averages and just beneath resistance. If this were to break to the upside, like what will that mean for stocks? It will, I think, potentially that could add into this consolidation potential, which I think is continuing to develop. It's one to watch. We just need to see which way this breaks. Does it like find resistance here and start to fall back towards the bottom of the range? We don't know. Keep a close eye on it. I think it's a really important one for stocks and also for commodities over the weeks and probably the next few months as well. So look, let's call that a wrap for this week. Thank you for joining me. Hopefully that's been interesting, and I look forward to coming back to you next week. Till then, bye for now.